Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, December 11, 2012. Well, a continuation of the trend to the upside today, and surprisingly no change of trend. The previous day's trading we had a doji type candle at the end of a 4 candle or 3 candle first time frame uptrend. The market was set up for a potential change of trend to the downside, but as with our interpretation of the candlesticks, we do require confirmation of these changes of trend, and we were looking for a lower high and a lower low in this case. The market didn't trade anywhere near the low for today's trading and took out the high in a very decisive manner. Very bullish candle, and the size of the body of this candle is much larger than we've seen for quite some time for the past couple of weeks, and it does suggest that the buyers now have some upside momentum. Just looking at this candle, however, the buyers did lose some commitment up around the top of the cloud, and we can see how the cloud can act as an area of support or resistance, and in this case it's acted as resistance, and that could be significant for this market. The fact that we've had strong price rejection from there does suggest that the cloud will hold as potential resistance, but now also the cloud is becoming quite a bit thicker as we move down through the trading days. There was an opportunity for the market to trade out through that cloud there because it was quite so thin, and the buyers just couldn't maintain that momentum when they were trading up there. So we do need to be careful for a potential change of trend. Now, just looking at this candle, however, we have had the buyers in control of this market. They've taken control of this market. They've made a fair amount of net bullish progress. So there aren't really any indications other than the shadow and the price rejection on the top here. There aren't any strong indications that there will be a change of trend. But obviously the resistance offered at the cloud here is becoming thicker over the next few days, and then quite thick as we run into the next few weeks, into the end of the year, and is actually travelling down. So if we do see price rejection, it will be more difficult for the market to trade up through the cloud and turn into a bullish market. Now moving on to the Fibonacci extension, and we're examining the relationship of the current first time frame uptrend that the market's in to the previous time the market was trending up, and here we see the market interacting with the 38.2% level. Previously the market was testing around the 23.6% level, only a minor level, but now the market failed to close above the 38.2% level. That may be significant for this market, and there is potential for the market to change trend here, although as I've mentioned already, other than the price rejection from above that area coinciding with the top of the cloud, we don't have any sign that the buyers are losing momentum, and certainly no strength from the sellers in this market at the moment. Now, in terms of the Fibonacci retracement, today we're seeing the market trade up through the 100% level in a bullish manner, and that does suggest that there is potential for the market to trade up to the 161.8%, which is at 1439, and just above the cloud. So there is a possibility that we could see the market trade up through the cloud, fail to close up above there, and find resistance up around that level and then sell off. So let's watch how the market reacts to the cloud over the next day, and certainly up to around the 1439 level of potential resistance at the 161.8%. Now, in terms of Ichimoku, obviously we have a market that's bearish in the long-term time frame by trading below the cloud, but we do have the market testing now to the cloud and finding resistance there, and there is a possibility that we could see the market break out up above the cloud and turn into a bullish market in the long-term time frame. We do have this resistance just up above here at 1440, coinciding with that Fibonacci level as well, so that will strengthen the resistance that we have just above the cloud as well if the market does continue the upside momentum that we've seen today. In terms of the Kijun-sen and Tenkan-sen, the market's trading above the Kijun-sen, the pink line here, so it's bullish in the long-term and medium-term time frame, but also bullish in the short-term time frame by trading above the Tenkan-sen. And that Tenkan-sen is now pointing up quite sharply, and that's reflecting some solid upside momentum that we've built up today. And here we see, as I've mentioned, this large white-bodied candle. And if generally when we see a market come off with a Tenkan Sen that's pointing up quite sharply. The Tenkan Sen is usually the first area that the market finds support, so we should have very strong support just where the Tenkan Sen is trading, and it coincides with the 14.15 level of previous support and resistance, so that will be a very strong level if we do see the sellers come back into this market. So keep an eye out for potential support around that level. Looking at the Kijun Sen, that's pointing flat still, so even though the market is moving away from there, it's shifting away from the equilibrium suggested by the Kijun Sen, there is still a possibility, while that's flat, that the market still could react back towards that Kijun Sen as it did here, so be aware of that. That if the influence of the resistance at the cloud does come to the fore, then there is a potential for the market to trade down to lower levels. Looking at the Chikou span here, that is with price action, so that's giving us some conflicting signals. Although the close here for the corresponding day with the Chikou span is below the Chikou span itself, suggesting that the market is destined for higher prices, but certainly with the Chikou span trading within the candle here, not too confident about the confirmation of any indications that we're seeing in the medium and fast term timeframes here. So moving forward, obviously the area above the high and around this level, around the cloud now, which extends roughly from probably down around 1430 up to around the 1436 level, is very, very important for this market, especially just above the top of the cloud, extending up to around the 1440 level, potentially very strong resistance, but certainly strong support down below at the 1422, and then down around the 1415 level. We don't have any signs of bearishness in this market at the moment. We have seen the buyers attempting to build some upside momentum. There was some price rejection, and there is still a possibility that the market will trade up out of the cloud. And if we do see a continuation of this bullish activity that we saw today, then there is a good chance that the market will test up above there and perhaps even break out up above this 1440 level and then trade to much higher levels.